So let's look at this risk transfer mechanism in these high stock markets. Because for 2024, they're counting on a buyback revival. But then they changed the rules to enable that, and that's one way of legal manipulation.
Welcome everyone to an insightful discussion with Lynette Zhang. Today we're diving deep into the world of stock markets and the critical signals they're sending us. Insider sales, a key indicator, could be hinting at looming risks on the horizon. It's essential to understand these signals and what they mean for your investment strategy, particularly in times of uncertainty. Join us as we unpack these insights and explore how you can navigate the ever-changing landscape of the stock market with confidence.
Today, we're going to talk about, oh gosh, why should I take my money out of the stock market? It's doing so well. But what we all know is that it's a lie on top of a lie. And how many times can you be lied to and you do not know the truth? So I'm going to show you some truth today. Let's just begin, because this really is all about risk transfer. We are at the end of this currency's life cycle. And so all of the gains have been transferred to the top. We know the income and wealth inequality. And now the losses that are looming must be transferred to the public so that those that are in power can stay in power. But I don't think that that's the way that it should go. So let's look at this risk transfer mechanism in these high stock markets. Because for 2024, they're counting on a buyback revival. You know, it used to be illegal for buybacks before, I think it was 95. I could be off on my dates a little bit. But then they changed the rules to enable that. And that's one way of legal manipulation to make the stock market look much better than they are. And so in 2024, with these very, very lofty valuations, not to mention the fact that they're all fiat money products, they are counting on this buyback, the buybacks to really support the markets and keep you ignorant of what's really happening underneath. Stock buybacks by Bank of America corporate clients have been above seasonal levels for 11 straight weeks, the firm analyst said in a note earlier this week. But why does that matter? Well, because corporate buybacks can help stock performance in several ways. By reducing the number of shares outstanding, buybacks make earnings and other per-share metrics that are commonly used in valuing equities look more robust. In other words, stock buybacks can make things look better than they really are. That's that whole tip of the iceberg and what's underneath it that we're talking about. This is what's underneath it. Because what are they doing to utilize these buybacks, to buy back their shares? Many companies are taking on debt. So they're shifting from equity, retiring, reducing their number of shares on there, and the company is taking on debt at the same time. So the share price goes up, but what you're not seeing is all the additional debt that's being taken on. So I thought that we could take a look at what that really looks like and use a stock that everybody is aware of. Okay, non-financial corporate debt. Can you see that how much that has grown and how much more rapidly that debt is coming on, even in this high interest rate environment? So let's just look at Apple, because of course everybody knows Apple. They're familiar with them. The company has used debt over the past decade to reduce its share count drastically. They would never hide the truth from you, do you think? You cannot create wealth with debt. You only create the semblance of wealth with debt until you can't. Think back to what happened with all that real estate in 2008. You had people making $50,000 a year taking out $500,000 mortgages that they really couldn't afford, and then buying, 20 houses, right? So what it looked like they were doing really well. But when that market imploded, it was devastating for a lot of people. The other thing that we've talked about quite a bit, and I want to bring this to your attention, is the concentration of in these mutual funds and these ETFs. So it's just a few stocks that are driving and making all of these stock market gains look like they're actually something. Let's look at the insiders for just a minute. Now, what I want to point out in this is 3 months. So insiders, so that is those are the corporate executives, those at the top, right? They've only just started buying the stock in the last 3 months. For the last 12 months, well, prior to the last 3 months, that would be 0. So insiders in Apple have only just begun to buy the shares. As the shares have moved up and stayed in that high range, they've sold quite a lot of shares. Over 12 months, 2,277,268 shares. This is insiders. These are the people that know what's going on with the company. In the last 3 months, well, while they bought 123,448 shares, insiders sold 252,409. But the repurchase program has hidden all of this. So in the last 12 months, again, even taking into account the purchases, which haven't been that great, 2,153,820 shares of Apple have been sold by insiders, those that are running the company. Want to go out and buy Apple? What do you think? I mean, after all, they did buy a few shares just the last 3 months. So this is what the public sees. The public doesn't see this. They probably don't pay a whole lot of attention to this, but they look at the stock price. You open your 401k, it doesn't look so bad, right? All right, let's take a look at Microsoft shares, right? And you can see those are actually making new highs. These are their share buybacks going all the way back to 2001. And so you can see they have a really great program for buying back their shares, and they certainly did quite a bit of it in 22 and 23, and their shares are making new highs. This is what you see. This is what you and I see and the masses see. What have the insiders been doing? Let's take a look at that. And by the way, all of these links you have access to, right? You're posting all of the links. So you can go in, and I would suggest that you actually pull this one. This is from the NASDAQ, because you can look at any stock and see what the insiders are doing over 3 months and over 12 months. So let's look at a little bit of truth. This can easily be managed by Wall Street, right? The ETF, which isn't even real gold. I mean, maybe they're holding some real gold in there, but you have no access to it. Physically backed gold ETFs and similar flows by month. And look at all of these cells. Now, the dark blue is North America, the green is Europe. So you've got the advanced economies that are telling, oh no, you don't need gold. Oh, let's sell your ETFs. Will that impact the visible price that you see? Of course it will. It is legalized manipulation, right? I mean, and do you read the contracts? No. Who knows more about this? Take a look, because this is the truth of the gold ETFs. This is relative performance chart of spot gold versus GLD. GLD was designed to mimic and imitate the spot price of gold, which in itself is a manipulation.
We wrap up today's discussion. We encourage you to stay vigilant and informed about the signals shaping the stock market. Remember, being aware of insider sales can provide valuable insights into potential risks. Keep exploring, stay curious, and make informed decisions to safeguard your investments. Don't forget to like, share, and subscribe to our channel. Thank you for joining us, and we look forward to seeing you again soon for more insightful discussions.